Yeah.
Order filled. Check us out.
You know what time it is.
This is Mighty Soldiers exclusive.
Yeah. Let's get it. Let's get it.
What's up, guys? Andy with Mighty Soldiers Trades here. We are back for another session this evening. We have a special guest with us. Erik has joined us, and I'm just going to bring him on because I really want to know what he's got to share. Because, guys, honestly, this guy's style of trading is not the same as mine, and I know that I'm going to learn a lot tonight, and I know you guys will too. So, how you doing, Erik?
What's up? Good to see you and your glorious beard. Got to give that a little bit of due credit.
Oh no, dude! Seriously, I have obsessive beard trimming disorder. I do, and this beard was at least this much longer just recent. It was about your size beard there, and I can't help myself. Every time I go in the mirror, there's trim, clip, you know, and just the littlest piece sticking out. I'm like, I gotta get rid of that. I gotta get rid of that.
It's good form though. Like mine definitely has a little bit more of the wild man disposition going on, which I don't necessarily think's the right answer. So I'm a big fan of what you got going on.
I'm going for the wild man disposition. That's where I'm going for. The wife, maybe not so much, you know. But she can't always get what she wants, or maybe she can. I don't know. But anyways, so getting into this, I'm really I would really like to know how you see the markets, how what you trade, what indicators you use, and to start this off, I heard in your video recently, we just talked about this. You're looking for strength in different sectors. So I don't know if you want to start there or, just let us know.
Yeah. So just to give like a super quick overview of my general approach to the markets for general context, I definitely am a derivatives trader. I've been doing that for literally over 15 years now. I started when I was in high school, funny enough. I'm one of those people that just got super lucky, had somebody show me the markets. And when I think about trading and analyzing the markets today, I see, and I've been saying it, I do a live session every Monday, and I feel like a broken record because this entire year I've been saying nothing but risk. I have been very lightly invested all year. I don't think I came over 15% of utilization so far this year. And it's because I have seen a increased level of potential downside, and I still see that. So one of the things that I think about when I'm trying to get an understanding of the overall market, I want to look at things like advanced decline lines or highs and lows for overall market breadth. And I think I don't know if this will work. Let me know if you can see that.
Well, if you want to, you could share your screen separately, and we can throw that up, and it will make us small in the corner.
Oh, perfect.
Just down there at the bottom, click the share button and choose whatever.
I'm on it. This is better anyways, because it's much better to share my screen than share my face. Oh, perfect. Yeah, man. This is like home. It lets you pick a window and everything.
So great to see you, Beach Bum. Nice to see you this morning, and glad to see you're back. Thanks for joining us.
Cool. So when this is kind of just a super general chart setup, and there is a lot of noise. I kind of cull through most of it. But when I think about the overall markets, there's a handful of things that I think are just tremendously useful. The first one is down here at the bottom, and I don't use this in all market conditions. I use it in the current market condition that we're in right now, where I think that there is still a lot of downside risk. And essentially, the advanced decline line is a way for us to get, again, overall market sentiment. It's a breadth indicator. So right now, especially in a bear market, declining market, we see the advanced decline line negative sloping, and it's been near all-time lows for an extended period of time here. So it just tells me that across the New York Stock Exchange as an overall index, there's a lot of weakness. There's not a lot of things advancing day over day and as a ratio of the NYSE overall. So this is like a really slick way just to look at the overall market pretty quickly. But then I do rotate through a handful of futures products to look at individual indices and then sectors. And I find looking at sectors, especially in a market that we have now, that we know we're in a bear market, we've experienced a bit of a decline. So now I think the name of the game is where's the bottom, right? That's the question for everybody. Where is the bottom? And the way that I like to look for that is to try to find some strength within individual sectors and looking for the leaders within those sectors. And this is stuff from Stan Weinstein. This isn't, Erik original thought. This is stuff that I've kind of crowdsourced from a bunch of different sources. But the interesting part is a lot of it really does start to play out, because essentially what will happen at some point, we will continue to get awful news. The market will react to the awful news by declining. We will continue to get more awful news, but the market will stop declining despite awful news. That's when we're starting to see a bottom. So that's really the name of the game at this point, is keeping an eye on that and seeing which sectors are providing the greatest opportunity, both if you want to trade to the long side and to the short side, depending on what your preferences are. It's fascinating to keep an eye on this stuff.
That's what I do. I switch sides throughout the day. I'm trying to, let the market tell me whatever it's doing. And it works out, but, I gave back a little bit of profit. But giving back, making, 4 steps forward and 1 step back, that is a perfect day, I think, as a trader. Yeah. Unless you can completely get the whole day. But what I love to hear, and what I like you, same thing. Everybody in the community has been my mentors. I mean, I know that you've had particular mentors that have dedicated time with you, but I have not. I've only had. That's why I'm bringing you guys on. It's really cool that you'll share whatever you're doing with me and with the community as a whole. But what I love to hear, and what was really exciting, is when I heard people, they have the same bias. They're looking at the market. Everything's telling them liquidity's dried up, that we still could hit lower lows, where we could, that we're not done yet. We haven't. The bottoming is a process. And I love when I hear somebody say, they're looking for that bull trap or whatever. We're looking for that beast out move. And instead of getting long for that, we're waiting and we're going to short that. That's the type of stuff that I really love to hear, especially for scalping stuff. But you're not really much of a scalper, right?
Yeah, I have a fairly strong opinion on retail scalping, mostly in that we just misuse the term all the time. Obviously we use it colloquially, but it's just because I think most retail traders, what we do is intraday trade, and sometimes very short time frames, even minute. Right. But in a pure sense, that's still not scalping. But again, I totally understand the colloquial use of the term, but I think that for retail traders, intraday trading is an awesome supplement. At least for me, it's an awesome supplement, but that is not the way that I've approached the markets at large in general. And it's for a few reasons. More than anything, it just incredibly time consuming. You have to be in front of the computer to do it. And one of the whole reasons why I started trading is for freedom, so that I don't have to be tied to a computer. But there are opportunities where you'll see, at least for me, I'll see certain market conditions that look really attractive in terms of a risk to reward profile, and I'll intraday trade and I'll sit there all day and trade it. But I think in general, for me, scalping or intraday trading is just more of a supplement as compared to like a primary approach for me. And it's mostly for those reasons.
Yeah, see, I'm just really not the best at picking stocks. Every stock that I try to pick, I end up smacking. Not everyone. I mean, I've had some success, but I've been watching these charts every single day for at least the last 4 years. I first started this in about 2008, and it was just with paper trading. I was a fan of the market rather than a trader. In fact, even when I started doing this every day, it still wasn't. We're growing as traders every day, and I'm sure you feel the same way, that you're never going to have this mastered. We're never going to be masters here.
Agreed.
But anyways, I by watching that price action every day, by watching the candles and staring at it, it's given me a lot. I can see what's happening pretty good. For me, it's more a mindset of, if I see that and I go after that, and all of a sudden that changes real quick, am I ready to let that go? Am I ready to shift my bias now, because I've given a piece of me to that idea, thinking this has got to develop, this has got to happen. And the quicker I can come to grips with, hey, that's wrong, let's get out of here, my day's fine. My day's always good. But for you and your trading, what I'm hearing, though, that's not really your problem. You don't need to hurry up. You don't need to. There is no hot potato here.
No, I don't think so at all. So the dude that really spent a lot of time with me on trading, he was a retired Army. I think he was in '06. I met him online. I literally have met him in person like twice, but I came across him online, and we came into this hilarious relationship where he's about as sarcastic as a human being could be, and he is equally abrasive. So for the first couple times I would ask him a question, I would quickly get told how stupid of a question that was, how I could just pick up a book and learn that. And I was like, I love this guy. So I just immediately fell in love with this dude. So I kept reaching out to him, and sooner or later we developed a pretty close relationship where I talked to him almost every day. And I picked up a lot of my trading tendencies from him. And the beauty in that is when I was learning from him, he was already retired using trading as income. So I came into trading with, it was almost backwards. Most people start trading trying to aggressively grow capital. And the guy that was kind of interacting with me was already on the far back end of that. And it was useful for me in developing my overall approach to have that context, because I am a firm believer, and it's why I love doing things like this. And I'm so thankful that people like you put events like this on, because there is no better teacher than your own experience. That is what it is. However, I am a firm believer that not every single human being needs to make the same exact mistake in order to learn from it. I do think we could pick up small pieces from what other people do. So long story short, I definitely have more of a open mindset when it comes to time frame. I have trades that are literally 500 plus DTE using options. I have trades that are intraday, like what you do. But I have found a general sweet spot for me is anywhere from 3 weeks to 50 days. And somewhere in that time span, depending on what I'm trading, what strategy, is where I'm able to make the vast majority of my returns. And I keep really, really detailed trade logs so that I can continue to try to funnel towards my strengths while tinkering with other time frames so I can interact with the markets at those periods. But yeah, for me, I look at any time frame, but the vast majority of my returns are going to come from 3 weeks to 50 days.
That's cool, man. Yeah. So one thing Brian Shannon says all the time. I love Brian Shannon. I think that anybody that really anybody getting into this, he is a great place to start. But also, if you've been in this for a long time, I mean, the wisdom there is astounding. And what I love about this guy is he's always talking about. He's always teaching me to be responsible. I'm incredibly irresponsible. I want to learn everything by failing first. I want to fall on my face to learn. You know, when I was riding skateboards as a kid, I'm jumping these like 6 foot half pipe things or whatever, half pipe, whatever. Anyways, dude, and I'm going over the backside and hit my face. So, you know, I want to learn everything the hard way, apparently. And that's what I've done here too. And he's telling people, you know, look, if we're below the 20 or the 50 or whatever it is, you know, this is a bearish moment. This is not where I'm trying to go long, guys.
I 100% agree with him too. I had him on my channel at one point. Actually, his book is literally right there. But he's fantastic. And one of the most interesting things I found by talking with him is that a lot of the tenets he discusses parallel things that you hear from other really successful traders, from, like, again, Stan Wetstein, Mark Minaveri. Like, these people have very similar messages. And I think that you start to say, okay, I've heard this literally 4 or 5 times from people that I know are good traders. There's probably something to this. And that's like a big part of my trading now, is actually using moving averages. He's the one that really got me into anchored VWAPs, but definitely moving averages. That's one of my favorite things about moving averages. It's as close to as black or white as you could get in technical analysis. I think that seeking ways to turn technical analysis more and more into a systematic approach that's less dependent on your interpretation makes it more repeatable, generally more successful. And moving averages, I think, are great for that. So yeah, that's like such a great message that he's sharing with you. I 100% agree with that.
Well, I mean, another thing, I say it this way. He says basically potential support and resistance. That these lines, all these lines, they could be potential support and resistance. I say they're a figment of our imagination until they prove themselves. Like we can see them on the chart, and you can establish a bias, you can establish a trend. There's a lot of things you can do with moving averages, but you can't just say, okay, it's going to this line, it's going to stop, unless it does, and then it proves itself.
I think one of the most important part with moving averages is the crossover. That's where it's very definitive and it's easy to tell, because you're right. Like if you want to use a moving average for kind of support or resistance or a potential reversion trade, there is a lot more to that because it's super subjective, especially for shorter term moving averages. You'll see something, bounce all around it. And it's like, okay, this is kind of hard to really understand what's occurring here if you're just using moving averages in a vacuum without other tools with it. But I think using longer term moving averages in conjunction with like clear crossovers is, especially for investors. So like I have friends that really, they're not into trading. Despite my best efforts, they don't like trading. So they're investors, which is totally cool. But one of the things I tell them is like, hey, if you are holding, 5,000 shares of SPY and you see it cross below the 50-day moving average, just get out of it until it crosses back up above. Just wait. And by doing little stupid things like that are so simple, you can set up an alert to do it for you. You can really miss most of the BS. And are you going to time everything perfectly that way? No, but it is a very simple way to reduce volatility in a broader portfolio, which is extremely useful in my opinion.
What I was going to say about that is, the crossovers, that's definitely time frame based, and you covered that by not corrected, but you covered that by saying, more so for investing. So if you're into like looking at a 1 minute chart and you got a crossover, a lot of times that crossover takes place, and that's exactly the moment that it beats the other way, and whatever. But so it's all relative to what we're looking at and what we're into. And what you're saying is, let's be responsible, guys. Let's just not even trade this garbage. And another thing to your point is on the weekly, during that whole bull run, the 20 was just about the place to add the whole way up. We stayed over that 20. We maybe popped a lower shadow and then continued to rise from there over and over again. It was a beautiful place to trade on the long side. And as soon as we crossed below that, and as soon as we had that crossover with the 9, crossing south of the 20, game over. And that is something to definitely take note of, because not noticing those things or not looking left on the daily, that's a big problem, especially if you're intraday trading.
Yeah, and I think that you hit on, just some contextual points, because when we're talking about trying to look at the markets in a broad scale and get a sense of how things are doing, again, like a lot of the names that we've mentioned already, they'll use longer term moving averages. Like Stan, he talks about using like a 210 day. I use 4 moving averages on pretty much all of my charts. I have like a very short term, so like a 9 day, 21 day, 50 day, and either a 150 or 200. So I don't use a MACD.
Do you have anything you want to show us with what indicator you're using, and perhaps show us any type of example of how you'd use them?
Let's take a look.
Putting you on the spot here, but if
No, it's totally cool, man. So let me find something that's a little cleaner without all this other garbage on it. Who doesn't like Apple, right? So this is actually kind of a fun one to look at. Man, look at me go, just picking a random fun one. So what we're looking at is a 1 year daily. For me, I typically like to start at least 1 year out, even if I'm looking at a 3-week trade. I do like the context, and it takes me just a couple seconds to look at the 1 year. And just to clarify some of the noise that you see on the charts, the kind of dashed yellow lines, those are linear regression channels. One of my absolute favorite tools, use them all the time, literally on everything. And then these are the 4 moving averages that I was talking to you about, kind of the blue lines, the dashed blue lines. So it looks like there's a lot of stuff on the chart, but realistically, there's not. There's linear regression channels, moving averages, and then this is an anchored VWAP, this white line. So when I'm using
on that,
I'm sorry, go ahead.
Where are we anchored to?
Right now it anchors to a specific date. So it looks like what happens.
That's what I was wondering, if it was If it was like an event, if it was like the COVID crash or anything.
No. So what happens with the anchored VWAP? Thinkorswim doesn't have a native anchored VWAP, so I wrote a think script for it. But what happens is it automatically attaches to the same date no matter what chart I look at. So this is the same anchored VWAP from some other random chart I was looking at. I just don't bother getting rid of it on each one of them. So you can kind of ignore that. But
hey, if it tells you something, that's all that matters, though, because that's what we're looking for here. We first we need the price to tell us something, so that's why we're looking at these candles to begin with. But then every single moving average, whether it be a Bollinger Band, MACD, RSI, anything we're using, it's how it speaks to us, and can it give us that definition? Can it define a trade for us? Because really, when I first started doing this, I was buying without a definition. I was buying because it's supposed to go up. I was buying because it's supposed to go down, or whatever it was, selling because it was supposed to go down. And we just need these things to be able to, okay, so here's a potential profit target. Here's a stop, or here's the red zone underneath where I'm just not willing to be in this anymore. You can establish that by how much you're willing to lose, percentage on the chart. I don't know, however you do it, position size. The chart's usually best. I mean, if we break to a lower low, I'm guessing that even anybody would say that, lower low is not something you want to hang on to if you're long, unless you're really just investing.
Yeah, I think that's absolutely fair. And I think one of the beautiful things about integrating at least some form of technical analysis, again, I think I was talking to you before we started going live about just general TA, in that I think TA is useful for context. I think its predictive capability is limited in terms of definitively being able to tell us if something is going up or down. I do think we can use it to create inferences on where the most likely direction something might go and, build a trade hypothesis off of that. But I think that it's important to keep technical analysis, at least in my mind, kind of in that box, that it's something I use for context, but it does not give me definitive information. However, when using things like moving averages, it's really easy to come up with some time-tested rules. Because again, like I was telling you, I think one of the most important part for retail traders is having good trade logs that you can take detailed notes on what you saw at a specific time when you made a specific trade and what your thoughts were, so that you can see if a thought process makes sense. And like we were talking about with the moving averages. So like I said, I use 4 of them, and it kind of goes, the darker it is, this is just the way my brain works, but the darker it is, the longer term it is, the slower moving, so to speak. And then I use the brighter colors to tell me it's more reactive. It's just an easy way. I mix that with weight. But anyways, you can see for these longer term moving averages, kind of, this is a 150 and then a 50. You can see a lot that's going on using just this 150 or 200. You don't even need the rest of these 3, because when something, and again, I hate doing these kind of analysis because like I'm looking historically, right? So a little armchair quarterbacking, but it is true. And you'll see it going forward, especially with this 150 turning over. But with like longer term moving averages, 150, 200, and they could be a simple or exponential, depending on what your preference is. For anybody listening, primary difference, simple means equal weight for each data input. Exponential just weights the more recent data inputs. The idea, it being a little more sensitive to current markets. But when we see these longer term moving averages upward sloping, then we tend to think bullish. And when you use those moving averages in conjunction with how the price is moving, how volume is reacting during those up moves, it can be super informative. So we see this march up in Apple, we see upward sloping 150-day moving average, and we also see a lot of volume supporting those up moves. It gives you some general context, and instead of just using one data point, you can kind of take a confluence of multiple to create a hypothesis. Now, what made me so bearish leading into this year, I started talking about being pretty bearish around November of last year. And it's because distinctly on broader index products like SPX, the Qs, things like that, the moving average started, its upward slope started flattening. That's never good. That is always a very early detection warning. Not necessarily that we're crashing, but that's not normal if we're going to continue to be bullish. So as soon as I start seeing this longer term moving average flatten, that's not good, especially because it takes a lot of momentum to slow down something that has 150 data points. So, and that's exactly why I like to integrate some of the shorter term moving averages. It gives me a little more sensitivity to what things are currently doing. This is the entire concept of like a MACD or MACD histogram. But using something like moving averages can give you a tremendous amount of detail in probably one of the most synthesized products out there. Again, like if I was trading a long-term buy and hold, if I see something dip below a 150-day moving average, I am getting out. And the only time I'm going to enter back in is when it not only trades above the 150-day moving average, but when the 150-day moving average is actually upward sloping. It means that there's enough momentum to move that entire moving average, again, northward bound as compared to declining. So it's just like a really simple way to use one simple tool to inform a very, very basic trading system for, investors.
Yeah, I mean, I really like how you're looking at these moving averages, especially the longer term. I look at the 200 myself, and I find the 65 and the 200 relation on the EMA is very beautiful, especially for intraday. But I mean, basically in every chart I look at it, it's really amazing. But you're kind of using this like an RSI, even. You're seeing within the longer term moving average that, hey, we're starting to wear out a bit. If I'm long, I'm starting to get, my spidey senses or whatever, I'm chilling out. I might be pulling back in a lot of ways. Yeah, I mean, there's a lot of things you can do in your strategy there, but it's really nice how you're looking at it like that. Anything else? Do you look at volume in your trades? Or
tremendously.
Patterns?
Yeah, tremendously. I think when I think about looking at any sort of technical analysis to create context, you can draw all the lines, that we want on a chart. We could put all these crazy indicators that exist in all their permutations, but at its core, every single price movement comes down to supply and demand, every single one of them. So I think the only way to accurately gauge supply and demand is using volume. It's also why I like to use VWAPs. Actually, some of these longer term moving averages are VWAP moving averages, because I weight VWAP pretty heavily in my analysis. And it's the same thing that you see back here, this dark gray area, that's a volume profile. So the volume profile is a super cool tool that allows you to understand where most of the underlying price transacted at given a certain aggregation period. So in this case, again, 1 year daily, you could see this dashed horizontal white line that's known as the point of control. And that's where the most shares transacted at that price.
I think it's pretty interesting that we're holding that basically as resistance right now, and we're just starting to pop through there. Things could get pretty interesting here, especially with this little inverse head and shoulders that we got as well.
Yeah. Yeah. That's especially in terms of the pattern. But yeah, in terms of the point of control, the way to think about those is the longer term the point of control is, the stronger it starts to become. And if you think about it logically, essentially this means that the vast majority of people transacted, again, at 147.90, which is the current point of control. So as if price remains suppressed below that level for an extended period of time, and we start to get up close to that level, it really serves as a pretty significant point of resistance, because a lot of people are happy to get out at break even. So as it gets closer to that line, after they've been underwater for months, you'll actually see a lot of selling start to occur as people get closer to their break even. And it's really fascinating to see just the volume profile, how it interacts, with overall price movement and where we can expect to see support and resistance. So for example, this little note up here, it's probably hard to see because I have it grayed out pretty hard, but there's a volume note up here at like 172.92. So there's a lot of people that transacted across the past year up at those levels that are not super happy right now. So again, you could develop a hypothesis that as it starts to get closer to that 172, 173 handle, we might see people offloading at what they perceive to be break even. And then that could be a short-term, short opportunity. But that's just the volume profile on the chart. And I think when I think about using volume down here in terms of analyzing things, the main thing I'm looking for is growth of volume supporting up moves. So for example, I have two averages here. I have the thicker line, which is a 70-day average, and then a thinner line, which is a 7-day average. And that's just for the volume. Again, just context, it's like moving averages, but for volume. And what I'm wanting to see is when we're having these rallies out from bottoms, is there volume supporting it? And the issue with a lot of these instances, like right now, that's not happening, right? You can see that it's not even hitting the 70-day average. So we're being lightly supported by volume during this up move, which to me would indicate weak rally. Like there's not a ton of strength. That's, to be clear, that doesn't mean that the rally is going to turn over. But if I were to assess the propensity for this rally to turn over, I would lean towards higher probability of the rally turning over. Now, there's
real quick, the rally either turning over, but you could also say that perhaps the rally hasn't found its power yet. You know, like the energy. You know what I'm saying? Like
absolutely. It means that there's not necessarily as many people that are entering into the rally, which also you could argue that because it's rallying so strong on light volume, that there's not a lot of sellers stepping in at those levels. So that very well could be a fair hypothesis. And that's why I think it is so important to use, again, multiple tools to create a holistic picture. Because again, just as you rightly pointed out, we could look at one indication, the interpretation of that one indicator, and you can have two completely different hypothesis based on the same indicator. So I think from there, it comes down to how does it look in conjunction with the rest of what we're seeing? Because for me, I also see that we're not experiencing lower lows. We have at least a little bit of a higher low here, and it's rallied through this previous high point. Who knows? It could continue up from here for sure. It would have to definitely go into more analysis off of that. But I think one of the most important things to keep in mind with volume is if I'm looking for something that's making big moves, or if I want to play something to the upside, I want to see strong volume supporting up moves. Stocks kind of really need that support long term. As you said, if this rally was to continue, I would expect to see more volume finding its way in. It's not so much the case on down moves. A stock can drop down on light volume pretty violently. It doesn't need a bunch of volume. They can kind of fall under their own weight. But if you see volume on down moves, that just really exacerbates things in a pretty big way. So for me, volume is one of the most important indicators when looking at a chart, again, and painting that whole picture using a couple different tools.
So basically, if I get this straight, you're looking for heavy volume on a green candle if you're looking green, and heavy volume on a red candle if you're looking for red. Is that correct?
Yeah, pretty much. If you see heavy volume on a red candle, that really exacerbates it. Again, you could have a series of red days that don't have a lot of volume. That's when I would use something like the volume profile to get a better picture of the type of transacting I would expect to see. So like, for example, when we start getting near the point of control, I almost always expect to see an increase in volume transaction. And it typically will occur because more people are getting involved at that point for one reason or another, right? Depending on whatever that trader's hypothesis is. But if I'm looking for a rally, it is requisite for me to see expanding volume into a rally before I will actually trust the rally.
Yeah. So, and what you were saying there, if you have the red days and you're seeing lighter volume on those red days, are you then looking for that volume contraction if your charts are telling you more of an upside move?
If I see a series of red days on light volume, I essentially am waiting to find a floor, meaning I would need to see some sort of volume to expand to create wherever that new level of support would be. But the other thing is, if I'm seeing something fall on light volume, I'll take a short trade in it any day and just ride to the downside until that, support forms. I'm very agnostic to the side of the trade that I take. in general, I would say I prefer long deltas, but in no way, shape, or form are those the only kind of trades that I would put on.
And earlier you had mentioned Mark Minervini, and I know that I believe that you do not believe that we have bottomed yet. That this is a process. No. This is going to take some time, and we're going to have some more dark days for people that are holding from the highs. Mark Minervini, one of the things that he says, and I believe I've seen him say it more than once, also in his books, is that the leaders, the stronger stocks,
exactly,
they're going to start moving up before the rest of the market.
Yep, absolutely. That is such a useful. It's a useful tool for people to think about because it helps you time pretty effectively. If you think about the indices track the performance of individual securities. So when we look at strong individual securities, you can kind of see the market beginning to bottom before the market actually bottoms, which is exactly what you're referencing there. And it's a super useful tool to keep an eye on.
Yeah, when I had got puts in both the SPY and CCL when we had that big huge correction, and I was sweating because I didn't trade options yet. Like I was just starting to trade options. I was more of just trading common stock, but so I was sweating on that end of it. But I ended up profiting huge. It was amazing. Like it blew my mind how much that I had made on those, just waiting that through and everything. But yeah, I don't know. I don't really like to focus too much on like the gains and everything, like the how much money we're making. I like to focus on this is sort of a side note. I over here I like to focus on primarily just what we've learned, like what we've been talking about. Whatever provides value in the charts, technical analysis, and stuff like that.
Well, I think you hit on an important point there, anyways, right? Because when we think about profitable trading, that's always my focus. It's not how often somebody is right or wrong, but how profitable is the trading. And that's one of like my biggest issues with new people that find their way into options trading that are relatively new to the space is they're obsessed with win rate. They want a high win rate. But what they don't fully understand is the concept of expectancy or expected return. And the fact that you can have a 95% win rate, a 99% win rate, but still have a negatively expectant strategy that you're deploying. And those are the worst because we all have an ego. People inherently don't like to be wrong. So when you have a strategy that does not make you wrong often, you don't get to practice being good at being wrong, but you start to get lulled into this false sense of security because you're like, man, I just made 100 trades, 95 of them were good. I should be doing great. And then you take a look and you're like, shit, I'm losing money. How is this possible? And it's, it comes back to that. So I really echo your thought process there, right? On focusing less on profits. They're an important part of the calculation, but I think if I'm thinking about performance, it immediately goes to expectancy and expected return.
Well, as far as win rate goes, I have a higher win rate, and I can rely on that in certain ways. But when I started, I thought of it a lot higher than I thought of win rate highly. It was wow. That's
we all
cool.
do.
I have a high win rate, and now I see win rate is very clear. It can benefit you in certain ways depending on your style of trading. But overall, I mean, if I win 95 out of 100 trades, but I lose more on one trade than I did on the whole 95, what good is that for anybody? I could have an amazing year and kill it all in one day or 1 week or whatever. So people got to keep that in mind with win rate. It's not just how often you're winning. It's how much you're losing versus how much you're gaining when you're winning, often like that.
Yeah, absolutely. And a really great book, it's an older one, but Contrarian Investment Strategies by David Draymond. He talks about different traders. They're looking for, like, in my opinion, good traders. They're looking for 5-1, where you are essentially risking 1 to make 5. And what that means is you could have a 20% win rate and still be profitable. Again, for me, I couldn't care less how successful an individual strategy is. It could be 30% successful in terms of, accuracy and win rate, or it could be 80%. What matters to me is expectancy. Does it make money? And is there good return on the risk? Because a win rate is only as good as the conditions. And you obviously have done a good job, right? Maintaining a win rate across different market conditions, which a lot of people struggle with. And as soon as people, sorry, go ahead.
Go ahead. No, go ahead.
As soon as people start taking losing trades, they start to lose confidence. And then it goes down this awful emotional cycle that just puts them in a whole other place. And unfortunately, a lot of people end up zeroing themselves out there. They're revenge trading. They're saying, oh, I just got to make this back, which is like one of the worst things you could ever hear a trader say. I just got to make this back. That's when you need to like turn off their computer for them and just say, nah, man, just chill for a minute. But yeah.
Well, I always let everybody know we're not here trying to regain our capital. We're not trying to win back our losses. That is never the goal. It's like Mike Billafieri says, one good trade, then one good trade, then one good trade. It has nothing to do with, okay, I just lost 500. Now I got to work the rest of the day to get 500 back. Now, if that happens at the end of the day, I can say that I got knocked down and I worked my way out of it. It's okay to say after the fact, but while I'm doing it, if I'm worried about making that back, that's going to be teetering on revenge trading. And in that case, I'm probably going to screw myself over. It's not going to be a good day. I've even done that before where I've doubled the loss. So I injured myself quite badly. Let's say I lost 3-1. So instead of, gaining 3-1, I lost 3-1. And then I was like, oh, pissed off about it. And I'm like, you know what? I'm going to go after it. I'm going to get this back right now. Then I lose the day 6-1. And now I'm like, dude, I just put a whole week back, a whole week's worth of work, everything I'm doing. I'm supposed to be paying bills and worrying about other people. And here I'm giving it all back.
I shake my head in agreement because we literally have all been there. We've all done that same exact thing because it's part of human nature at one point or another until I think people really recognize how mental the game of trading is for retail. Those kind of mistakes, it's just part and parcel to the learning path. The tricky part, again, it's like you've rightly pointed out, you've found a way, you've identified the flaw, and you've applied a corrective action, where most people get stuck in this really ugly loop where one of the most concerning things I see in the trading community is when somebody is really happy about a quick win. That to me is a gigantic red flag. And it sounds weird. What do you mean? They're happy. It's a quick win. Who wouldn't be happy? As soon as somebody starts showing their hand like that, it tells you, imagine what that person is going to be like when they have a loss that they weren't ready for. That's the person that's not going to be able to just rip the Band-Aid off, take the trade off at a loss. That's the person that's going to let a loss grow. And a lot of really awful things starts to happen to those thought processes. Like one of the things I've always tried to emulate, especially like, in the military side of things, I was an officer in the Marine Corps, and we're always taught, like, you're the stoic one. You're the one that's going to be calm, relaxed. When things are going to shit, people need to look at you and not feel like you're exacerbating that whole scenario. And I think that applies to trading, because if you feel elated on a good trade, that's not going to look good when it's a bad trade. So I think pursuing a more even-keeled approach to trading, if you have a winning trade, sick, book the win, move on. If you have a losing trade, that's part of your trade plan, sick, part of the trade plan, it all fits into the puzzle, move on. And I think like that kind of thought process and creating that emotional detachment to the trading capital is super important.
Well, I find that interesting, because everything you've told me so far about your trade style says exactly the same thing about your career in the military there. So that's pretty awesome, because I'm never against anybody's trading style. I'm for anything that works for anybody. Yeah. And I think that we need to all find what suits our personality. And I will be the first to tell everybody, if you want to do what I do, if you want to be watching price and finding these little micro trends and getting in and out and everything, you better have the highest amount of discipline. You have to be ready in a split second to correct everything you just told yourself, everything you built up. You have to be ready to do that. And what is it? Juicy Trades. He says no setup, no trade. And one of the reasons I'm assuming he says that is because his audience, he doesn't want them to have that moment where they cannot let that loser go, that they're just locked like deer in the headlights. He knows that's what's going to happen, and it's like, just trade with the trend. Go, the path of least resistance. Let's not make this harder than it has to be,
Right. Yeah. And I think I would be remiss if I didn't mention like one of the most pivotal points in my trading career is that same mentor I was telling you about, the grumpy old guy. I was asking him some questions about a strategy, and he asked me, he's like, "Oh, let me take a look at your trading plan." And I was just like, "What's that?" And he was just like, the document that you surely have started to write down all of your thoughts on how you think you're going to manage this thing. Let me take a look at that document. And obviously, I didn't have one. So I was like, "Oh, well, I could just explain it to you." And he literally was just like, "I will not talk to you until you have a trading plan started." And I was like, good. This falls in line with the rest of our interactions. So sick. I guess I will start this. Long story short, I think creating a trading plan is probably the biggest change in my trading. And it is comprised of a few major pieces. You have the overall trading plan, which for me is just a Word doc. And then inside the trading plan, I have a couple sections. So like a portfolio management section, how I intend to deploy the portfolio, and then what I like to call strategy outlines. So every strategy that I trade, I create an outline in this trading plan. And what it forces me to do is to think about the setup, just as you were discussing, that I'm looking for every single time. Does that mean I can never deviate from the trading plan? No. Again, my mentor, interestingly enough, the paradox that he is, he would always say, the trader has the last say, but you got to be disciplined and follow your plan. I was like, what is this Yoda stuff, man? Like, so I'm just always wrong. But I understood his point. It's that you need to put in the legwork to create a plan. Most importantly, to think through things before you experience them. Just like in the military, before you go deploy, you've done a whole workup cycle. You've practiced most of the things you're going to practice. So you at least have an idea of what this should look like when you get over to wherever you're going. And the trading plan is a great way to do that. It's a great mental exercise, forces you to go through your paces. And then you can always apply whatever you need to apply as a trader once you develop that trust with yourself. But I love that idea of no setup, no trade. And another thing that I would always add on to that is if you ever enter a trade without a defined profit and loss point that is positively expectant, what are you doing? What are you doing? Right. The only thing that's going to happen is you're going to put on these random ass trades and be upset at the outcome.
Now, when you create this trade plan, I'm assuming that you're putting all possible outcomes into this trade plan. So you're ready already. If let's say I'm looking to go long because of such and such, and all of a sudden it's clearly not that, and we break a level that that it is turned into an entirely different beast, you're ready to go short on that, correct?
It not always necessarily flip to the other side, but it definitely is apply management to whatever trade I have on, without a doubt. And I cannot think of the last trade genuinely that I put on that I was surprised about something. I genuinely cannot remember. And it's because when I put these trades on, I've gone through enough rigor and I have enough data from that trade log I was referencing earlier to quantitatively back up the current trading approach that it gives me a ton of comfort. And like right now I'm trading the coverage triangle. It's kind of like my go-to strategy in a lot of ways in IWM, which I trade all the time. And I have short puts as part of that coverage triangle that are underwater. They've been underwater for months now. And I've just been slowly adjusting them. Does not bother me literally in the least. I am simply waiting for certain conditions to be met at which I apply a known management approach to that condition at that point in time, make that adjustment, and then wait for the next set of conditions to be met. That's it. Like I don't think that trading has to be this super, emotional cycle that a lot of people find themselves in, because really it's to their own detriment, right? Like, when's the last time somebody's been really upset or really mad and made great decisions?
Yeah, I mean, that's another thing. I entirely want. Okay, you'll hear the approach, trade like a robot or whatever, and I understand that, and that is accurate when it comes to controlling the negative emotions. But for me, I also believe in having fun and just generally having fun with what you're doing. Enjoy your day, be excited about life. But you made a great point that if you're going to be super excited about something, but you also find that on the flip side, you're getting really upset, you're hitting your desks. A guy I was a mentor at another trading service before, and I think he said he threw his monitor out the window, he threw his chair out the window. And it's like, the guy was hilarious, and we love to hear these things because they're fun to hear. But in the end, if you're really excited on this side, but you're throwing your chair out the window, the next day, that doesn't seem, we're not managing our emotions properly. Emotional maturity is paramount with trading.
Yeah, and I think it's always dangerous when people trade as a hobby. I think that that's always a bad choice. But to your point, I also really like the markets. Like, I genuinely enjoy them. So it's this really weird dance about enjoying it, because I do enjoy looking at this stuff. I do enjoy understanding how, nat gas futures are impacting cobalt. I like that. But it's so important, in my opinion, to keep the aspect of actually deploying trades as regimented as possible, as pragmatic as possible. But I really get upset when people talk about, trading like a robot. And the reason why it upsets me is because, to me, it tries to relegate the most complex aspect of the human condition, that it literally is impossible. I do not know anybody who has no emotions. I know nobody. And I think the only way to successfully create controls for emotions, which we have, is to acknowledge their existence and then to find what you need to do, to control. Like, for example, one of my things for a long time is, if I was intraday trading and I saw something meet conditions that I thought meant this is a good trade, I would be trying to get into the trade as fast as possible. I didn't care about getting a good fill. I didn't care about checking if there's earnings tomorrow that might influence the price of the product. Like, I was making ridiculously stupid errors because I was just in a rush. I didn't want to miss it. So I forced myself, acknowledging that really bad trade. I forced myself to literally go through a trade checklist. I made myself a checklist, and before I could enter the trade, I had to go through that checklist until I finally earned my own trust, because that emotion that existed.
That's exactly it. I can say the same thing until the day I came to this desk and I started going through a mental checklist. And I even said, I want this on the wall right here. I want to be able to see this. I want to know that every single day, what am I here for? If I'm here because, say, I want to help people, or I want to help my family, or whatever I want to do, or if I'm just trying to make a good, decent, income from trading, I have to know that I'm going to protect my capital. But I noticed you got the hatchet there and the boomerang and such, and there's no holes in the wall. I don't see broken glass. Your chair seems to be fully intact. Your monitor probably works because you're looking at it right now. So you seem to have your emotions in check.
Well, that's why I'm hanging pictures on the walls, because real difficult to see. Yeah, it's weird. I consider myself still more emotional than I like to be, but my wife always says that I'm really not emotional at all. And I think a lot of that, awkwardly enough, has to do with growing up. I had an alcoholic dad, and I just remember never wanting to experience the ups and downs that he had, because when he was sober, he's a great dude, super fun, genuinely an awesome guy to be around. But when he was hammered, he would literally just beat the shit out of you for no reason. You're like, okay, maybe move away from this. So I think a lot of the way that I've approached just emotional regulation is from that background. And then again, in the military, one of my favorite sayings is suffer in silence. I love that saying. I say that to people all the time. Nobody cares, shut up. But really what it's teaching is like successful processing of things. It doesn't just mean, ignore it. And I think that applying that not only to trading, but life in general leads to a much happier life, right? Like if I'm driving down the road and somebody cuts me off, what does me getting mad about it do? I used to get mad about it all the time. I used to get furious. But what does that actually accomplish? And it's not much. It's completely outside of my control. The only thing I've done is hand over the keys to my emotions to this stranger in a car who also can't drive. And it's just not a good life choice.
Yeah, dude, I agree with you 100%. I was in Airplane Jane's stream few weeks ago or something like that. And, she made a point that gave me a reflection within myself that when I was a kid, same thing as you, not the same exact scenario, but I had fighting around me when I went to school. My brother had fighting that ended up reflecting on me negatively. And, I got kids that are 5 years older than me chasing me between the trailers and stuff like that. I had a guy that was older than me push me in front of a semi truck when we had moved and near the school. Yeah. So, all this fighting that I became used to. And for me, it's not even a thing. It's a comfortable place.
Just a quick question. We kind of just skipped over this semi-truck part, and I'm fascinated to know. So obviously the semi-truck didn't connect, but what?
No, the semi-truck did not connect. It was incredibly close. I was on the side of a 2-lane or 4-lane road, and it had a divider. We were under the viaducts. So there was no place to go. There was a wall on each side, so I couldn't get away from these kids or anything, And the kid had threw me into the 2-lane on the eastbound side, and there was a semi-truck in my lane. Semi-truck swerved around just as I quickly pushed myself back towards the sidewalk, and I slipped up the sidewalk away from these guys. The semi-truck didn't hit me, but I did just get thrown in front of a semi-truck.
That kid literally tried to murder you.
Oh, yeah.
I've had 2 knives pulled on me in high school, and I thought that was something. But you literally I will never mention those stories again. That is wild that a kid tried to murder you by pushing you in front of a... That's wild.
I will tell you, though, unfortunately, and it's really sad, next to none of those kids made it, man. They all ended up coming to something that they brought into their lives or was going on in their lives already. And most of them didn't make it. It's astounding to see how many young people didn't even make it into their early 20s.
Yep.
But that's a whole other story.
Yeah, you're right though. Like those kind of people, they tend to have their own demons that they're working through. They're not able to manage it, and yeah, it's unfortunate.
But I threw that into my trading though, and I found that this reflection still lies there, because I'm not like a violent, like go hurt people on purpose, fight like that kind of person. But I'm totally cool thriving in an area of struggle. I've had a lot of struggle in my life. And it's kind of a comfortable place to be, so I don't mind so much. So it doesn't stress me out. So if I buy rated support when we've already had a downtrend and I catch that nice little bull trend, that's no sweat. The way that I manage something like that though is position sizes. I think
Yeah. I love that, and I think that's one of my favorite thing about talking to traders. Is most of us come from not, obviously not the same backgrounds, but similar backgrounds. Like most traders I know have come from some sort of disadvantaged background and wanted to try to find a way to autonomously make a change. And that's one of the coolest things about trading, right? Like the barrier to entry is opening a brokerage account. That's what you got to do. And they're free to open, or $20, whatever.
And the barrier for a guru is getting a Twitter account on YouTube.
What's that?
I said, and the barrier for a guru from there is getting a Twitter and a YouTube.
Yes, that's the secret. It's really the Twitter, because I'll tell you what, when I started my YouTube channel during COVID, and it's because like when a lot of my friends, they're still active duty, because I had just rolled off active duty around then, but they were all stuck at home when COVID started. And I was just like, oh, let me just do some phone calls with my friends. I'm like an evangelist for a handful of things. Investing and trading is one of them. Surfing is another one. Fighting in a gym is another one. And anyways, I was making phone calls with my friends, and I found myself repeating a lot of the same things, because we were going over like the basics of investing in finance. Make sure you have 6 months security funds, that kind of stuff. And I was like, yeah, this is getting old real quick. I still want to try to help people out. So I made a couple videos and I said, hey, listen to these 3 videos real quick, and then we'll do our call. And then I just kind of kept going from there. But I hate YouTube with a fiery passion because I don't belong in front of a camera. It's not my thing, but I love the community. I love the community of traders. I love even the community like that I'm, a part of. It's so fun to talk with all these other people like yourself, right? Different style of trading, different approach, but there's still a lot to learn from it. And I think that all goes a long way. And just as Beach Bum Trading was saying, I see your surfboard on the back wall over there, but
yeah,
in Florida, there's not much surfing, right? Unless there's like a hurricane.
Oh no, actually, where I'm at, man, the waves are pretty decent for a good portion of the year.
That just blew my mind. And other thing that I've learned about Florida, I don't know if you've seen this, but I guess on the Gulf side, there's like big tankers that are going somewhere, but they put out like these smaller wakes. And I've seen in the Endless Summer, super fun movie if you haven't seen it, but there's a group of dudes that surf the waves from these tankers, but the waves go on for miles. Like a normal wave, you're on it for 15, 20 seconds if it's a good wave, but these guys are on them for miles, which is pretty cool.
Well, by no means am I trying to call you or myself a guru. I know that you're against that sort of thing and you're just trying to provide value. I'm here to provide value. I love that you're for the military community, and thank you for your service. I appreciate that as well. Anybody who's looking out for those who served, currently serving, even first responders, that's exactly what I'm here for. When I first got here, and I know we're over time a little bit, but when I first got here, there was really no recognition that I could find for military. And then TradeStation came out with TradeStation Salutes and developed a relationship with, I love trading with their product, and I love everything about what they stand for. It's great company. But anyways, over time, I found that a lot of those companies, they just didn't have the way to verify who was a veteran, and they didn't know,
right,
how to make that happen, so, and they didn't want just anybody, false veil or sort of thing, claiming that they had served just to get a discount. But overall, the community has been very open, either for a public, official discount, or, hey, get a hold of us through email or send us a message, let us know this or whatever, and we will totally hook you up. I love that. I love that you're educating those that serve. I don't know if you've ever got to go be a part of like a civilian contractor or just anything on base, but you live pretty close. That would be awesome as well.
It would be interesting. Yeah. So far, I'm enjoying the work from home and go surf, and keep my life pretty simple.
Yeah, I have found that going to the beach, hitting a trail, anything like that, it has helped my trading and my success,
of course,
in a great way. Being somebody who can trade a lot in a day, or I can just walk away. It's nice sometimes when I see that we have no capitulation, we have no real move happening. It's best just to get my shoes on and leave, walk somewhere beautiful, and not give up money trying to fight something.
I actually really I look forward to the videos that you and your wife put out on Twitter. It's always cool to see like that region. I've been to Florida a couple of times. I really, really liked it. But it's neat seeing that because it's obviously just so different than what it's like out here. So keep doing those videos. They're fun to look at.
Dude, I appreciate it. And I will be out there eventually. I've not seen a sea lion or a seal or anything yet. And having all those rocky cliffs and stuff along the ocean, that seems pretty epic as well. So I'll have to see.
They're all over here, man. Yeah, the sea lions, they're used to the boats and everything. They'll hop on a boat. Yeah, they're pretty bold.
And I did not know that what are you, like 75 degrees every day? How is that? I don't.
I think 70 and sunny is what we call it. What's up, Shrey J? Good to see you, man. That's one of the dudes that I was actually just teaching him about the ratio put diagonal. We were spending a while on the critical strike formula. So,
you have a lot of great information. I really love talking to you today. I've never met a trader yet that I haven't really enjoyed talking to you, but you have a great outlook. I love your perspective on the markets. I would love to talk to you again. Maybe we can go in depth on something else, but we've kept these folks little past time so far. And dude, seriously, thanks so much for joining us and everything you put out here. I hope that a lot of people get value from this.
Yeah, same to you. Thanks for putting this on. It's a great time chatting with you. You're a great conversationalist. Always good to talk trading with cool people. So until next time, we'll catch you guys later.
Well, before we do that, I want you to let people know where they can find you, because obviously you got a lot to share. So
so either on Twitter at esInvest, or the YouTube channel is also at esInvests. And as you probably could guess, that's where pretty much anything is esInvest, and I'll pop up somewhere. But yeah.
Yeah, so you guys definitely go follow him. We'll put a link in the description. And so follow Erik, and dude, hit the like, hit the subscribe, go over there, hit the like and the subscribe, and we'll see you guys next time. Thanks, Erik. Appreciate it.
Awesome.
Thank you guys.
Take care.
Yeah.
Order filled. Check us out.
You know what time it is.
This is the Mighty Soldiers exclusive.
Yeah. Let's get it. Let's get it. If you wanna take it to the streets, let's get it. If you wanna take it to the booth, let's get it. I'm about to take it to the top, let's get it. We ain't never ever gonna stop, let's get it. You ain't never heard nobody spit like this. Call the paramedics when I get like this. Front page news when I wreck like this. Hop in the booth and I wreck that shit like,
If you with the squad, then you already know what's up. It be going down, but my account is going up. I'm about to make another 100,000 bucks. Rolling up that chain, I'm about to take another puff.
Hold up, I made a killing, now my pockets got swollen. Independent, now I'm taking over. I'm a lot richer, you a lot broker. I'm a pot smoker, stockbroker, blowing up like a supernova. On my mama, I was born a soldier, the best in the game, man, I thought I told you. If you wanna take it to the streets, let's get it. If you wanna take it to the booth, let's get it. I'm about to take it to the top, let's get it. We ain't never ever gonna stop, let's get it. You ain't never heard nobody spit like this. Call the paramedics when I get like this. Front page news when I wreck like this. Hop in the booth and I wreck that shit like, I am unstoppable, I can do anything I ever wanted to. Never did anything they ever wanted me to. Got on my side and I'm not gonna lose and they not gonna win. I see them, the haters, it's all cause I'm getting dollars again. Commas on commas on commas, I'm buying the dip. The market is dropping again. I can see him hating from the sidelines. If you see a hater, tell him bye-bye. Watch my money grow, 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 grow. And my wifey like, whoa, 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 whoa. Somebody better stop me cause there ain't no competition and I'm coming for the top position. Obliterating the opposition every time that I jot it in the composition. Everybody wanna stop and listen cause I bring it to you hotter than the oven in your mama kitchen. I'll be getting hit like a politician. I'ma get bread when you stack looking taller than Scottie Pippen. Ain't nobody ready for the Armageddon when I pop the clip and I ain't playing. I'm spraying you brain, I'm bringing the pain like Damon Wayne. You disappear like David Blaine. I'm dropping bombs, Saddam Hussein. Stop and aim, pop you lames and pop champagne. I ain't playing so stop the games, you know the name. If you wanna take it to the streets, let's get it. If you wanna take it to the booth, let's get it. I'm about to take it to the top, let's get it. We ain't never ever gonna stop, let's get it. You ain't never heard nobody spit like this. Call the paramedics when I get like this. Front page news when I wreck like this. Hop in the booth and I wreck that shit like, yeah. Yeah, yeah. All right, man, I'm out.